what I'm seeing in Hyperliquid in terms of the growth of applications on that chain after just 1 year of being around is pretty extraordinary. It's gone from like 1 application to 40 applications, which is more than Sui. And it puts it in sort of like top 5 or 6. Now Sui's just there as well, but then you obviously got BNB, the established players like BNB, Solana, Ethereum, of course, and Arbitrum and Base. But you know what you're seeing in these emergent L1s being Sui and Hyperliquid is the net worth growth aspects, which give you confidence that even though you're out the risk curve in them, that you're seeing the kind of growth that we did see in Solana in the previous market, in the previous bull market, that, you know, provides confidence that, okay, even though value is concentrating, they are now growing more aggressively or faster than the more established L1s, and they will be around, most importantly, in 5-10 years from now.
Hyperliquid has quickly expanded from 1 app to over 40 in a year, putting it among the fastest growing blockchains alongside Sway. While Ethereum, BNB, and Solana still lead, newer chains are showing Solana-like momentum from the last bull run, hinting at long-term potential. The cycle remains familiar. Bitcoin rallies first, then altcoins follow. Ethereum processes massive settlement volumes daily, with Tron close behind, while Sway and Hyperliquid are gaining traction by supporting stablecoins and even Bitcoin transactions. The big picture is clear. Not every altcoin will survive, but those with strong adoption and growing settlement values could become long-term winners.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Thanks for the support and enjoy the video.
So let's first talk about layer ones. And you and I have kicked this around for a long time. I don't believe that revenue accrued to the chain itself is the key metric. And it confuses people. How are you thinking about this now?
It is an important metric because it shores up the security of the chain. But at the same time, the trend is lower transaction costs. So if you look at revenue as a share of settlement value, that is going to continue to decline. I think it's an important thing to understand. But there's probably better ways to synthesize fees in more of a relative valuation metric, like fees relative to some other aspect that defines value on the chain. That's probably more relevant than just looking at it in a gross or a sort of a nominal basis. I've started to really dig into a little bit more around some of the valuation frameworks, and you were like one of the guys who came out early with sort of the Metcalfe's law framework. Which was modeled on settlement values and daily active addresses. And no doubt that there's that just models price. A lot of the things though in crypto model price because, the metrics that we use are the dollar-based metric or defined in the price of the actual token. So if the token increases, so does that metric. And it's very hard to disentangle how much of it leads one another or what leads. It's the ongoing issue with crypto in that, like, how do you value these? Where is the predictive value in all these on-chain metrics? And I think this jury's still out. But if you look at things like settlement values, right? Which is part of your Metcalfe's law framework. That doesn't get talked about enough, which is like how much value is actually moving across these networks. How much of it is stablecoin orientated? How much of it is just peer-to-peer transfers?
Because if not, you're kind of measuring the activity of the economy based on the fees that the banks make or something, or the telco providers. Right. And that doesn't make sense, right? Because on top of the telco infrastructure or the internet infrastructure is all of the value that comes on top. And if you don't capture that, then you're not capturing the actual value of the network itself and what you can use it for.
Absolutely. It's a multifaceted approach. So if you just look at fees, or if you just look at users, you're missing a lot. If you just look at one of these metrics, they're not telling the whole story. And they're also pretty much at every metric can be gamed.
Yeah.
That's also the problem. So you need to have a multi-factor approach when looking at this. So
and
I look at
the hardest one to game for an extended period is settlement, because that costs you a fortune. You can game wallet addresses, you can game active wallets, you can game all of that, but it's really hard to game total value transacted or total value settled.
Yeah, because you're paying a fee on that. Like someone's paying the fee. Now there is still scope for some around that as well within chains.
Because there is in all of crypto, there's general is what you need to assume at all times.
You do, yeah. So you have to look at all these metrics with some degree of skepticism, but if you can build up a patchwork of them to tell, is this network expanding? So you mentioned like layers, which is a critical element. So you've got the fees, which is maybe in isolation, just an expression of like rent seeking, right? But if the number of applications on top of that network are expanding, and the number of interactions between those applications expressed through diversity of transactions, so borrow, lend, dexes, perps, social applications, and then the settlement value, you get a much more complete picture of, okay, fees are growing, but as a percentage of the overall value, that might be declining, which means that this chain is essentially becoming more efficient. And the tax or the toll to operate in that network or in that economy is declining as a percentage of the overall GDP. And so
that's another way of thinking at it, because you and I have talked about these as economies and we're looking at GDP, and tax take is not necessarily the best measure of economic activity.
No,
it's kind of another way. And you might say the fees are the taxes, as you said, to operate within the economy, but that's not necessarily the full value that the economy transacts.
Yeah, like if you compare it to a country, right? So if it's just, if there are no other alternative countries to go to, then that country has got monopolistic sort of pricing power and will overcharge for services to a point where people start to get fed up and move elsewhere. And that kind of happened in 2020 and 2021. So yeah, and Ethereum knows this, and Ethereum's going through its scaling mission, and that's why you can see that it's performed very well this year in terms of most metrics. Fees have been strong, but fees have actually been declining because they're making those strides to make costs in the Ethereum ecosystem cheaper.
So that's kind of like a government deregulating the economy, freeing it up, charging lower taxes, creating a better free market economy. Because before Ethereum, to your point, back in 2021, with the economic activity that was going there, was too expensive. It was the California of the crypto economy, and everyone's like, "Yeah, we love it here. It's amazing, but I can't afford to live here any longer."
Yeah, we don't like the policy, so we're going to move.
And welcome to Solana.
Yeah,
or the layer twos.
Yeah. Exactly.
So you think of the layer twos as kind of different states somehow within that equation, and they're cheaper, offer lower tax breaks, but they're not quite as good. There's not as much policing around, so they're not as secure. It's amazing how similar this is once you think of it in economic terms as digital economy.
Hyperliquid has grown from 1 app to over 40 in a year, joining Sway as a fast-rising blockchain. While Ethereum, BNB, and Solana still dominate, these newer chains show strong potential, much like Solana in the last bull run. Bitcoin leads the cycle, with altcoins starting to gain momentum. Ethereum handles huge settlement volumes daily, with Tron, Sway, and Hyperliquid catching up fast. The key takeaway: only altcoins with real adoption and utility will survive and emerge as long-term winners.
So, layer ones, in your models, what's looking interesting, what's not interesting right now? We're starting to see picking up activity overall, but it's still not quite perfect. But so what are you seeing in your models?
I just see that we've got a situation where value is concentrating in the top L1s, and I think that it's becoming harder and harder to maintain a thesis around these tier twos in the smart contract platform world, or tier threes, let alone, as value does get more concentrated in the larger.
And what are the tier 1, 2s, and 3s? Give us examples of them.
So if you just look at settlement value, this is actually in the next report, Raoul, which will be coming out in the next couple of days, but I'd focused in on settlement values, right? So, one half of your Metcalfe's law model. Yep. This is a breakdown of settlement volumes across L1s and L2s, most of the large ones. So Ethereum this is a 30-day median. So it's about 28 billion per day, which is just, wild when you think about it. Tron, which, has much lower application diversity. It's basically a one-use chain, and does have governance issues as well. It's not, you couldn't never claim it as decentralized as Ethereum, but it settles about 24 billion. Wow. So right there you have, the lion's share of all settlement value across the crypto ecosystems. Now, Solana and Sui, which has really raced up. The growth rates in Sui this year have been phenomenal. And I'm trying to dig a little bit deeper in terms of like where that value is sort of flowing from and to.
I think it's because I did the work on it in GMI and looked at its relative growth versus Solana, because similar fast performant modern chains. And I mean, it's massively outstripping the speed. Obviously it's at earlier stage. So of course the rate of change. It seems that it's the Bitcoin settlement layer that's big, plus stablecoins are moving fast. And the DeFi ecosystem is starting to work as well.
Yeah. Bitcoin on Sui. Well, I mean, I was genuinely surprised that Sui had increased its position in terms of settlement values to where it is now, where it's rivaling Solana. So that's pretty phenomenal. BNB is still there. It does.
Yeah, and just again, for people to frame this is the settlement value of Metcalfe's law. When you look at Solana, there's more active users. So of course, Solana is still worth more than Sui, which doesn't have as many active users, even though it's settling the same amount. It's like Doge has a lot of value as a market cap because it has a lot of active users and holders and less so of the on-chain activity. So it's like you can have different variations of this that drives the overall market cap value.
Yeah. And there's no perfect mix as well. I would argue that application diversity, is a very important metric overall. That takes time.
As if not, it's like, again, going back to the economic example, it's like the Saudi Arabian economy is just oil. Can be very profitable, very rich, but it's so driven by one factor. So the more diversified the economy, like the US economy, for example, the better it is.
And Saudi Arabia knows this, and for the last 10, 15 years has been diversifying its economy aggressively because it doesn't want to be solely reliant on that on a commodity. Yeah. So I mean, when you look at the settlement values, there are there's a whole lot of there's
so sorry, I can't see the chart, but where's Hyperliquid? Because it has shot into almost the top 10. It's now currently larger than Sui, but it doesn't appear so high in settlement volumes. Is that right?
Yeah. So I should caveat this too. So the settlement volume data is coming from one of the on-chain metric companies, so Artemis. And what goes into settlement volumes are a couple of different things. You've got the stablecoin transfers, you've got peer-to-peer transfers, you've got, the equivalent of like whatever network, the ERC20 token transfers, NFTs, Hyperliquid. When I check the data, they're only capturing the DEX volumes, which is spot volumes, which is
so not the derivative volumes on top.
They haven't captured they're excluding derivatives volumes, but they also have not addressed the peer-to-peer transfer side. But Hyperliquid's a very young chain, so that is quite small, but it's also being undercounted. So some of these numbers are probably not 100% reflective of the true state, but I think that they're pretty good proxy for, where things are now. There is a table in my upcoming report which looks at settlement values as well as applications. So, how many protocols are now on the chain? Because obviously Hyperliquid didn't start as a chain. It started just as a perpetuals trading venue. And then it launched a chain, and then it went after applications. What I'm seeing in Hyperliquid in terms of the growth of applications on that chain after just 1 year of being around is pretty extraordinary. It's gone from like 1 application to 40 applications, which is more than Sui. And it puts it in sort of like top 5 or 6. Now Sui's just there as well, but then you obviously got BNB, the established players like BNB, Solana, Ethereum, of course, and Arbitrum and Base. But you know what you're seeing in these emergent L1s being Sui and Hyperliquid is the net worth growth aspects, which give you confidence that even though you're out the risk curve in them, that you're seeing the kind of growth that we did see in Solana in the previous market, in the previous bull market, that, you know, provides confidence that, okay, even though value is concentrating, they are now growing more aggressively or faster than the more established L1s, and they will be around, most importantly, in 5-10 years from now.
Hyperliquid and Sway are rising fast, showing Solana-like momentum while Ethereum, BNB, and Solana still lead. Bitcoin drives the cycle, but altcoins are quickly gaining ground. In the long run, only chains with strong adoption and real utility will last, with Ethereum, Tron, Sway, and Hyperliquid standing out. Which blockchain will lead the next cycle? Ethereum, Solana, Sway, or Hyperliquid? Can new chains overtake the established leaders? Let us know in the comments.